Unexpected sell-off. Berkshire Hathaway stock plummets day after NYSE glitch. Shares of Berkshire Hathaway nearly registered their worst day this year Tuesday, a loss almost certainly not connected to Monday's bizarre issue that caused the New York Stock Exchange to show Berkshire shares down almost 100%, but still coming as a steep sell-off that even confounded Wall Street analysts. Berkshire Hathaway's Class A shares fell more than 2% to below $620,000 by mid-afternoon, pacing toward their largest daily loss since February, while its cheaper, baby Berkshire, Class B shares sank more than 2% to just below $410. The sell-off came as a surprise, as it did not have a clear catalyst, Argus research analyst Kevin Heal explained to Forbes, adding he doubted it had anything to do with the glitch. Heal noted that the losses for Berkshire came amid smaller stock declines for several of its largest investments in public companies, shares of Bank of America, Chevron, Chubb, and Occidental Petroleum each fell 0.5% or more, adding it's likely the sell-off was due to some benign profit taking from investors who cashed in following Berkshire's nice run. The stock is up 15% year-to-date, slightly outpacing the S&P 500's 11% gain. Keefe, Bruyette and Woods analyst Meyer Shields pointed to the double whammy pressuring Berkshire shares due to the accompanying shaky investor sentiment and expectations for stubbornly high interest rates, which drain not just the value of its nearly $400 billion worth of stock holdings but also the earnings potential in its own businesses, especially in its interest rate-sensitive insurance in its core insurance and energy subsidiaries, as a possible explanation for the Tuesday losses. So much uncertainty about short-term rates is messing with day-to-day stock movements for publicly traded asset managers like Berkshire, according to Morningstar analyst Gregory Warren. Buffett's net worth shrank by $3 billion Tuesday as Berkshire shares slumped, with Buffett's $135 billion fortune declining by the most of any billionaire outside of India, according to Forbes' real-time billionaires tracker. Buffett, whose net worth is almost entirely comprised of his roughly 15% stake in Berkshire, is the eighth richest person on the planet, falling behind Google co-founder Sergey Brin on Tuesday. Both Heal and Shields also pointed to a $178 million settlement reached by a Berkshire-owned utility company Tuesday over 2020 wildfires on the West Coast as perhaps the most direct headwind facing Berkshire, though the news was announced during standard trading hours Monday. Though that's chump change compared to Berkshire's overall $189 billion cash pile, it's un-Buffett-like news that can shake shares a little, considering the 93-year-old Berkshire chairman's affinity for greenbacks, quipped Shields. Berkshire stock was surprisingly in the news Monday as the New York Stock Exchange incorrectly displayed a 99.97% intraday loss for Buffett's firm due to a technical issue, causing a block on all trading for Berkshire's Class A shares for nearly 2 hours. Berkshire is the eighth largest public company in the world and is among America's most profitable companies, generating $96 billion in its latest year, trailing only Apple's $97 billion. Buffett, considered one of the most successful investors ever, oversaw a rise from Berkshire's Class A share price from below $500 in 1980 to its over $600,000 level today. The losses for Berkshire Hathaway this past Tuesday have bewildered investors and analysts alike, primarily because there seemed to be no single, clear reason for the decline. The previous day, a technical error on the New York Stock Exchange led to an erroneous display showing Berkshire's Class A shares dropping nearly 100%, which caused confusion but did not directly contribute to the following day's sell-off. The Class A shares of Berkshire Hathaway fell by more than 2%, dropping below $620,000. The Class B shares, often referred to as Baby Berkshire, saw a similar decline, falling to just under $410. This drop marked the steepest daily decline for the company since February. Despite the lack of a clear cause, analysts like Kevin Heel from Argus Research believe the decline is unrelated to the previous day's glitch. Heel suggested that the drop might be due to profit-taking by investors, considering Berkshire's strong performance this year, which has seen a 15% rise, slightly ahead of the S&P 500's 11% gain. Adding to this perspective, Myers-Shields from Keefe, Bruyette and Woods highlighted a double whammy effect influencing Berkshire's share price. This includes general investor sentiment, which has been shaky, and expectations for persistently high interest rates. High interest rates can adversely impact the value of Berkshire's significant stock holdings, valued at nearly $400 billion, and can also affect the profitability of its core businesses, particularly those in the insurance and energy sectors that are sensitive to interest rate changes. Gregory Warren, a Morningstar analyst, also pointed to the uncertainty surrounding short-term interest rates as a factor that complicates day-to-day stock movements for asset managers like Berkshire. This uncertainty can cause investors to react unpredictably, contributing to volatility in stock prices. Warren Buffett, the chairman of Berkshire Hathaway, saw his personal net worth decrease by $3 billion due to the share slump. Buffett's fortune, which is almost entirely tied to his roughly 15% stake in Berkshire, now stands at $135 billion. This drop made Buffett the billionaire with the largest single-day decline outside of India, according to Forbes' real-time billionaires tracker. As a result, Buffett slipped in the global rankings of the richest individuals, now positioned behind Google co-founder Sergey Brin. A significant development that might have impacted Berkshire's stock was a $178 million settlement announced Tuesday by a utility company owned by Berkshire, related to the 2020 wildfires on the West Coast. Although this settlement represents a relatively small amount compared to Berkshire's $189 billion cash reserves, it is considered un-Buffett-like news, and could have shaken investor confidence slightly, according to Shields. The backdrop of this situation includes an unusual event from the previous day when a technical glitch on the New York Stock Exchange led to a temporary display showing a nearly complete loss of value for Berkshire's Class A shares. This caused a trading halt for almost 2 hours, creating confusion among investors. Despite this glitch not being directly responsible for Tuesday's losses, it added to the unusual circumstances surrounding Berkshire's stock. Berkshire Hathaway, the 8th largest public company globally, is known for its substantial profitability, trailing only Apple in generating the highest profits last year. Under Warren Buffett's leadership, Berkshire's Class A shares have risen dramatically from under $500 in 1980 to over $600,000 today, reflecting Buffett's reputation as one of the most successful investors in history. This recent decline, however, serves as a reminder of the market's unpredictability and the complex factors that can influence even the most robust stocks.